Hello traders, Gary Wagner here, just before 1 o'clock in Honolulu, 7 o'clock in New York. It is Monday, 20th day of July, 2020, and this is the Daily Report for Gold and Silver. What a way to start the week. Phenomenal move in silver. Very, very nice move in gold with all the precious metals trading higher. Little weakness in the dollar providing some tailwinds, but these gains were based upon traders bidding these metals higher, and that is what is important. We'll take a look at our current trade, our technical studies, which look at our resistance and support areas, and talk about our basic strategy. But first, to the price board. Traders, what a way to start the week with mild dollar weakness. We had massive buying in the precious metals across the board. Gold basis the most active August contract, $819 after gaining $9 on the day. Next will be October. That will become the most active, $1828.90, up $8. And then spot or Forex gold is currently at $1817.30, a gain of $8.40 on the day. Now, platinum gained about 1.5%, $862 and change. Palladium gained a full percent at $2,092, but the shining star once again was silver, over $20, $20.33, gaining 57 cents in trading today. In terms of the ETFs that we follow, we gained about 0.5% on our GLD trade, 170.94. Nugget also had a spectacular day, gaining almost 5%. $4.40 at 93.53. Lastly, silver gained about 2.89%, and that is the SLV iShares Silver Trust at 1853. Let's take a look at our technical studies. We are currently open in Australia. Australia has bid the precious metal about $1.80 higher than today's close. You can see that with this small line here, but what is important is today's activity, and that is this single candle, which took gold approximately $9 higher. We still see the first level of resistance occurring at approximately 1830, 1829. And that, of course, is represented not by a Fibonacci number, but rather the most recent high, and that is this high here. We've got to take that out. But realize, in terms of a closing basis, when we take a look at gold and simply create a horizontal line off of this high here, what you will see is we are just shy, within about $1 of the closing price that was achieved when gold traded to its record high this year. So we are pegging basically our resistance at 1829. We definitely have support between 1800 and a little bit below. And the below that I'm talking about are these series of lows that came in and challenged the $1,800 mark. But on each occasion, the market was able to close above $1,800. And although there is extremely strong support, I believe, at 1,800, major support comes in around 1760. You can't see it so much on recent activity, but when we go back, we can see that these series of tops in the market were definitely a point in which we saw resistance marked at this particular price point and to some degree here. But once we moved off of that price, we got a new support level. The former resistance has now become support, and that, of course, is at 1,800. Our upside target remains the same. The question is, how long will we see this first leg of the rally continue? While today's rise was unquestionably very bullish for gold, when we look at a 240-minute chart, that's what we're looking at right now, we have to acknowledge that there is some resistance that comes in at around 1819, and we can see that series of tops here. However, this is the highest close since the market traded above that back here at the beginning of July. So while I don't see any issues in terms of breaking above this particular resistance, my question is how it will react if and when it reaches 1830. I do believe it will hit that. If we see any kind of resistance, that's a point to pull profit. If it continues to trade and moves up the channel itself, then we would maintain our long and look to exit somewhere at the top of the channel. That's what we talked about on Friday. But for right now, my recommendation is to maintain your current long position in gold futures and Forex gold. Of course, the SLV, other ETFs, NUGT and GLT, those are long-term investments. They are now all in profits, and my recommendation is to hold on to them. They are long-term portfolio investments. And unquestionably, I believe that there is more room on the upside for silver to travel before it hits its first level of resistance. We are looking at a short-term 240-minute chart. We also have our Elliott wave count, and in essence, what we are looking at is a long wave 3. This is our corrective wave 4. We are currently in our 5th wave, and both GET as well as my studies are indicating that it could go as high as 2125, 2150. That's my number here. I believe we could easily see that achievable before we see any kind of correction. Lastly, when we look at the MACD, moving average convergence divergence, you can see that the number is rather low. We have just had a cross, and it is a lagging indicator, but nonetheless, it is signaling higher pricing in silver. For those trading silver, maintain your long futures or Forex position. And traders, we talked about the rebalancing of your portfolio to include 2 ETFs. We added a 3rd SLV just last week. First, I want to take a look at Nugget. We recommended accumulating this particular ETF on June 29th. Market was trading roughly at 73. It is now at 93. So you are up about $20 per share. In terms of percentages, that is a healthy percentage gain. We are looking at the GLD ETF, the Spider Gold Trust. We entered roughly at 167, just slightly below that price point, but we'll mark it at 167, currently at 170. So we've got a nice profit on that. But realize, because Nugget has that leverage, that's why it's outperforming these other electronically traded funds. But nonetheless, they are working for us. And traders, lastly, we're looking at SLV. That was a recent addition for us in terms of recommendations. On Friday, it was trading at about $18 per share. It is now trading at $18.53, and that is because silver itself gained almost 3% in trading today. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.